Today, you have the S&P 500 and markets as a whole, their total valuation of equities as a percentage of the phony economy, it's almost 200%, Elijah. Back in 2007, it was just above 100%. And if you look at the home price to income ratio, it's at a record high, even higher than it was in 2006, the previous high.
You're watching Silver News Daily. Subscribe for more.
Are you prepared for the financial storm that could wipe out your savings? While gold and government bonds might be a usual go-to, there's a lesser-known asset that's poised to outshine them all: silver. And according to financial expert Mike Pento, if you don't start stacking silver now, you could be making a huge mistake. Stick around to find out why silver might be your best bet to protect your wealth in the coming economic crash.
The economy continues to slow, and precisely the reason is because inflation has put on ice 4 of the 5 quintiles. So it's only the top 20% that are really spending. If you ask them, they're doing fantastic. The homes that I own, multiple homes that I own, are at record highs in valuation and prices. My stock portfolio is doing pretty darn well, thank you very much. That's where all the wealth is concentrated, in that top quintile, that top 20%. But if you ask the guy who's renting, if you ask the guy who's, got a manufacturing job, it's a disaster for them. So there's a lot of pressure on the economy, the consumption part of the economy, because these people are heavily in debt. Yet, yes, if you look at the consumer in aggregate, they have about 70% debt to incomes, which historically is very high. It's not that they don't have any debt, but if you look at the lower quintiles, credit card debt, auto loan debt, student loan debt, not only are they saturated in that debt, but those default rates and delinquencies are spiking. And I just don't see how you could just start cutting rates and everything's fine. Because if you look at what happened in the Great Recession, the Fed started cutting rates in the middle of 2007. That was their first rate cut. And they got aggressive in 2008. They went from 5.25%, Elijah, all the way down to 0 by the end of 2008. But that didn't stop the stock market from going to full meltdown mode and home prices from crashing. And we have bigger bubbles in those two assets today than we did back then. Back then, home prices were the salient problem. Well, the stock market wasn't really the issue, but the S&P still lost 50% of its value. Today, you have the S&P 500 and markets as a whole, their total valuation of equities as a percentage of the phony economy, it's almost 200%, Elijah. Back in 2007, it was just above 100%. And if you look at the home price to income ratio, it's at a record high, even higher than it was in 2006, the previous high, much higher. And of course, when you add in insurance and taxes and maintenance costs, the home prices are just unaffordable. So that's where you're seeing a lot of pressure, downward pressure on the economy, downward pressure on prices, because the natural gravitational forces are for prices to fall. That's the natural state of affairs. It takes a lot of monetary fuel pushing into the market to keep these prices afloat. But if the bank lending isn't there and the consumer doesn't want to borrow and corporations are saturated in debt, and they are, then I don't think you're going to have much of a mollifying effect from a handful of rate cuts that are going to happen between now and, say, the middle of 25.
In times of economic uncertainty, finding a safe place to park your wealth becomes crucial. Safe haven assets are those rare financial instruments that hold or even increase in value when the rest of the market is in free fall. Think of them as your financial lifeboat when the economic seas get rough. But what makes an asset truly safe? It's not just about tradition or popularity. It's about liquidity, functionality, limited supply, and above all, the certainty that demand will remain strong no matter what. Historically, assets like gold, government bonds, and even the U.S. dollar have been considered go-to-safe havens. But with global markets facing unprecedented challenges, you might be surprised to learn that some of these assets may not be as reliable as they once were. That's why understanding what makes an asset a true safe haven and why silver is emerging as a standout choice could be the key to safeguarding your financial future.
True, but is that what they really? So is that what they really mean when people, the average Joe says, inflation has come down? He means the level of prices is falling. That's what he wants. That's what they need. They need home prices to fall 40% to be affordable. 40%, not 40, to put them back in historical means. 40%. Food prices are up 50% in the past few years. They have to fall. But what's happening is that we're not getting deflation. We're getting disinflation, and on a rate of change basis, better. So 9% increases are worse than 3% increase in prices, but prices are still going up from an unaffordable level. That's why when you ask the average person, what's inflation doing? It's wiped me out, and prices are still heading higher. That's the problem. And as we heard today from Chair Powell with his press conference and statement at the Jackson Hole Symposium, he's like, hey, what a great job we've done. We can now start cutting rates. So you've wiped out the middle class. Prices aren't falling, they're rising. They're rising at a slower rate, a rate that's way above their 2% target still. And that's mission accomplished. And we're going to start this whole monetary circus all over again. That's what you just heard now is the truth about how inflation became so high and why I don't think long term, I think we've just begun to scratch the surface on how high inflation is going to go in this country. So I'm predicting we have a truncated period right now we have disinflation. I think it could still morph into deflation because the Fed's cutting rates just to follow the bond market lower. The bond market is already priced in at 3.8%. The 10-year Treasury note has already priced in the Fed's rate cuts. Mortgage rates are 5.5%. They've already priced in a series of 100 or so basis points and rate cuts. So I don't think we're out of the woods yet with recession. I don't think we're out of the woods yet in deflation. But on the other side of that, you're looking at intractable stagflation as far as the eye can see.
When we talk about safe haven assets, gold is often the first thing that comes to mind. Its reputation as a store of value has been built over centuries. Government bonds, particularly U.S. Treasuries, are also seen as a rock-solid option, backed by the full faith and credit of the U.S. government. And then there's the U.S. dollar, the world's reserve currency, which has long been a pillar of stability in times of crisis. But here's the catch. In today's rapidly changing economic landscape, these traditional safe havens might not offer the protection they once did. Gold, while reliable, is no longer the only player in the precious metals game. Government bonds, especially in an environment of rising debt and potential inflation, carry their own risks, and the U.S. dollar, while liquid and widely accepted, faces pressures from geopolitical shifts and domestic economic policies. Enter silver, a metal often overshadowed by gold, but with a unique combination of properties that make it a compelling alternative. Silver isn't just a precious metal. It's also an industrial powerhouse. Its demand comes from a variety of high-tech applications, from solar energy to electronics, making it less susceptible to the whims of the financial markets. And with a supply that is limited and difficult to ramp up quickly, silver has the potential to rise sharply when other assets falter. In fact, as the economy teeters on the brink, the case for silver as a safe haven becomes stronger by the day. While gold and bonds may play their part, silver's dual role as both a monetary and industrial asset gives it an edge that could be crucial in the turbulent times ahead.
First, you have to define what inflation really is. I mean, I'm just shocked when I hear people talk about inflation. Kamala Harris, Vice President Harris, and lead candidate for the office, thinks that inflation comes from price gouging. That's the real problem that we have is corporations are gouging prices. Well, I mean, I went back and I looked at the profit margins of most corporations and they haven't budged. So, I mean, when you think of price gouging, you're thinking, well, your costs are flat, and then you're just raising prices like mad on the consumer, and that's not what happened. What happened is that the Federal Reserve from 1913 to 2008 printed $800 billion from the horrible creation of the Federal Reserve all the way through this 95 years. It took them 95 years to print $800 billion of what is known as high-powered money, base money supply, or the Fed's balance sheet. Pretty much all the same thing. And then in 2 years, Chair Powell printed $5 trillion. So when it took 95 years to print 800 billion, it took Powell 2 years. And actually, since 2008, the Fed's balance sheet went from, as I said, $800 billion to $9 trillion. So $9 trillion, $8.2 trillion of money printing since the global financial crisis. That is where your inflation came from. Now, inflation has eviscerated and wiped out the middle class of this nation already. Or I think they wiped out the bottom 4 quintiles. So inflation, as the politicians would like you to believe, is, okay, the rate of change has come down.
Financial expert Mike Pento has been sounding the alarm on what he sees as an inevitable economic collapse, one that could dwarf anything we've experienced in recent memory. Pento's analysis is clear. Inflation is out of control. Debt levels are unsustainable, and asset bubbles, especially in real estate and the stock market, are poised to burst. But what does this mean for your wealth? According to Pento, we are on the brink of a perfect storm, where traditional assets might not provide the safety net they once did. He warns that the Federal Reserve's aggressive monetary policies, which have inflated these bubbles, will soon lead to a severe economic downturn. When this happens, the value of the dollar could plummet, and those holding traditional assets could see their wealth eroded almost overnight. But here's the silver lining, literally. Pento points out that in such scenarios, silver, with its unique mix of industrial demand and monetary value, is likely to shine. Unlike the dollar or even gold, silver's price could skyrocket as investors scramble for assets that can hold their value or even appreciate in such a crisis. If Pento is right, and many indicators suggest he is now, could be the last chance to secure your financial future by stacking silver before the crash hits. In uncertain times, following the advice of experts like Pento could make all the difference between safeguarding your wealth and seeing it vanish.
On record saying that she wants to not guarantee, you got me started on this, so I'm blaming you. So United States is a meritocracy. What we do is we guarantee a level playing field, a fair and level playing field for everyone to succeed if they work hard and if they put in the effort. But Kamala Harris says she wants guaranteed outcomes. She wants to guarantee equal outcomes. That is egalitarianism, egalitarian socialism. That's what that is. So you're not going to say, I'm going to give everybody the same opportunity. You're going to say you're going to give this group of people a lot more money so they can end up the same place as everybody else. Well, that's called egalitarian socialism. And that ends up like everybody ends up in the same place like they do in Cuba. That's not where we want to go as a country. It's completely antithetical to what the founding fathers wanted. We have a country here, or we had one, that was based on freedom. You have the freedom not to be hampered and fettered by government. Get government out of the way. And that's what markets are about: freedom, individuals voting with their pocketbooks as to what they want to produce and what they want to consume. But we don't have that. We don't have freedoms. And I point right back to the Federal Reserve. My friend John Rubino did a very good study. If you price GDP in gold, you price the stock market in gold, so in other words, adjust it for an accurate inflation barometer, we don't have much of an economy here. We don't have much economic growth, real or organic growth. It's just inflation. stock market inflation, GDP inflation. So, you know, in trying to pursue a policy now of inflation on top of what we already have done, and it all rests on the hands of the Federal Reserve. This is a huge mistake to start going down the road to make prices go higher. The aggregate price levels rise from here. It's very destructive to a middle class that's on life support.
Silver isn't just valuable because it's shiny, it's a workhorse of modern industry. Over half of the world's silver demand comes from its diverse industrial applications, making it much more than just a precious metal. This dual role as both a monetary asset and a critical industrial material sets silver apart from other safe haven assets. One of the fastest growing uses for silver is in the renewable energy sector, particularly in photovoltaic cells that power solar panels. As governments and companies worldwide push for greener energy solutions, the demand for silver is projected to soar. Additionally, silver's unparalleled conductivity makes it indispensable in the production of electronics, from smartphones to the latest medical devices. But that's not all. Silver's antibacterial properties are becoming increasingly important in the healthcare industry, where it's used in everything from wound dressings to water purification systems. The metal's versatility ensures that there is always a strong baseline demand, regardless of economic conditions. What does this mean for investors? As industries continue to innovate and expand, silver's industrial demand acts as a solid foundation, ensuring that its value is supported by real-world uses, not just speculative trading. In an economic crisis, this robust industrial demand can help silver maintain or even increase its value, making it a more resilient asset compared to others that rely solely on market perceptions. So, while gold might glitter in the spotlight, silver's practical applications give it a unique edge, reinforcing its role as a safe haven in both good times and bad.
I'm a libertarian, so I'm not. I am going to vote for Donald Trump. But if you let's just look at the fact that I don't see either one of these candidates are libertarians, hard money advocates. So I would like to see someone who actually espouses going back on the gold standard, but that's not Donald Trump, and it sure as heck isn't Kamala Harris. Well, some of her policies are just very, very bizarre. For instance, as I mentioned, she blames inflation on price gouging. Well, the margins of corporations haven't changed. It wasn't a sudden epiphany on the part of corporations that we want to start just massively raising our prices for no reason. The margins haven't really changed. So, and then she says she wants to do things like I want to give. This is her solution to the housing crisis: is to give people $25,000, first-time home buyers, $25,000. From where, Kamala? Where are you getting the money from? And let me see. So the government's giving subsidies. So like when the government gave subsidies for college, did that bring college costs down? You know, all you're doing is increasing demand for homes without increasing the supply. Now I know she has some cockamamie, we're going to limit red tape. You can't do that quickly. You're never going to have a match. You're going to have a massive mismatch between when you start sending out checks to $25,000 checks to first-time home buyers. And listen, my son doesn't have a home yet. He's 21 years old. Man, hey, you want to have a home? You apply for the home. Get yourself a house, Michael. My son. So, I mean, you know how many people that really shouldn't be buying a house would then be buying a house because they have a $25,000 check from the government? So you're putting massive supply on the low end of houses. That's what you would do, sending prices much higher because the supply would be a big supply-demand mismatch. So it's bizarre. I mean, a lot of her policies make me, think more of Venezuela than the United States. I mean, she's on record saying, and I don't want to get so political here. Again, I'm a libertarian, but Kamala Harris is on.
While silver's industrial demand makes it a valuable asset, its historical performance as a safe haven during times of economic crisis is equally compelling. Time and again, silver has proven its ability to hold value when other assets falter. Let's look back at the 2008 global financial crisis. As markets crashed and investors scrambled for security, silver's price surged by nearly 24% in 2009 alone. This wasn't an isolated incident. Silver continued to climb, reaching a peak in 2011 as the effects of the crisis lingered. Investors who recognized silver's potential early on reaped significant rewards as it outperformed many other traditional safe havens. But why does silver consistently perform well in these situations? The answer lies in its dual role as both a precious metal and an industrial commodity. While its industrial demand provides a steady floor for its value, during crises, silver also benefits from increased investor demand as a form of financial insurance. It's a dynamic that allows silver to not only preserve wealth, but potentially multiply it when the economy is in turmoil. Moreover, silver's relatively low cost compared to gold makes it more accessible to a wider range of investors, increasing its appeal during economic downturns when liquidity is key. This accessibility can drive up demand quickly, leading to significant price increases. In essence, silver's track record during past economic crises is a testament to its resilience and potential as a safe haven asset. As history shows, those who invest in silver during uncertain times often find themselves in a stronger financial position when the dust settles.
Personally, I like silver when we have a global reflation occurring, and I just don't see that right now. So you want to see the global economy starting to boom. So this because silver has an industrial component and a monetary component. So you want to see global growth accelerate. So demand for silver would be strong in the context of some reflation. I don't see that right now. I just don't see it. And remember what I said. The Fed can control short-term interest rates. They don't control long-term interest rates. And if you look at the fact that we've had real positive Fed funds rate now for well over 12 months, so it's well over a year, and they're positive by 2% plus, that seems to be that's when you see that's when historically things get really ugly in the money markets and in the economy. So I'm monitoring the situation. The odds are very high for a very chaotic period to occur. The time is just not, it's just not yet, but I'm watching.
As we look at the current market landscape, it's clear that sentiment around silver is stronger than ever. Investors and analysts alike are increasingly turning their attention to this often overlooked asset, and for good reason. In an era marked by economic uncertainty, inflationary pressures, and geopolitical tensions, silver is emerging as a standout choice for those seeking both protection and growth. Recent trends show a surge in silver demand, particularly from institutional investors who are moving substantial amounts of capital into the metal. This is a significant shift, as these large-scale investors typically had access to extensive research and market insights that guided their decisions. The fact that they are now heavily favoring silver signals a broader recognition of its potential. Moreover, global supply constraints are also playing a role in silver's rising value. Mining production has struggled to keep pace with demand, particularly as the push for green technologies and renewable energy continues to accelerate. This imbalance between supply and demand is expected to drive prices higher in the coming years, making now an opportune time to invest. Additionally, we are seeing increased interest in silver from retail investors, spurred by its relatively low price compared to gold and its proven track record during economic downturns. This grassroots movement is further amplifying silver's appeal, creating a strong foundation for sustained growth. The market sentiment is clear. Silver is not just a hedge against inflation or a safe haven in times of crisis. It's a strategic investment that could offer significant returns as market conditions evolve. As more investors recognize this, the window of opportunity to secure silver at current prices may be closing fast.
I mean, gold loves negative real interest rates and falling nominal interest rates. That's exactly exactly where we are. So what gold hates, what gold gets killed in, that's the environment is what I would call sector 4 of my portfolio. The sectors go from deflation, disinflation, stasis, reflation, and then stagflation or hyperinflation. Sector 4 is when you have a relatively healthy economy in the context of rising nominal rates, which happens in reflation. Well, we don't have that now. What we have is the Federal Reserve, who is telling you that, hey, we're ready to start cutting interest rates. Here we go. We're going to start cutting rates. We're going to be cutting rates for the next year or two. We're going to take them down to around 3%, from 5.25% to 5.33%. Effective Fed funds rate is 5.3%. And that's the direction of travel for interest rates. So nominal rates are going to be falling. And if they're falling in a context where we don't have deflation, because remember, gold does not like liquidity crises or a sharp deflation. Gold really likes disinflation. So I always start with 5% physical gold in your possession, and then you toggle your investment portfolio of what I call liquid paper gold between 0 and 20. We are at 10% right now in that very liquid, I call it, like I said, liquid paper gold. So think of that like either ETFs or even the gold miners. But in an environment where you're headed into possibly disinflation to deflation, you should be very wary of miners, because miners are stocks, and stocks usually get killed in deflation. So just be careful of it.
Given everything we've discussed, the looming economic threats, the unmatched industrial demand, silver's proven track record as a safe haven, and the current bullish market sentiment, it's clear that now is the time to act. Silver presents a unique opportunity to protect your wealth and potentially benefit from significant gains as the economy continues to face unprecedented challenges. But here's the thing. Opportunities like this don't last forever. As more investors wake up to the potential of silver, the market is bound to react. Prices could rise rapidly, making it harder to build a substantial position in silver without paying a premium. That's why it's crucial to start stacking silver now, while prices are still within reach. Imagine looking back a year from now with silver prices soaring, knowing you've had the chance to secure your financial future, but hesitated. The cost of inaction could be far greater than the price of silver today. Whether you're a seasoned investor or just starting to explore safe haven assets, silver offers a compelling mix of security and growth potential that few other assets can match. So, what are you waiting for? Take action today and start adding silver to your portfolio. Don't let this opportunity slip through your fingers. Remember, in times of economic uncertainty, those who prepare are the ones who thrive. Make sure you're one of them by investing in silver now.
Yeah, I mean, so in the year 2000, we had a stock market bubble concentrated in the NASDAQ. We didn't have a bubble in the S&P 500. A bubble really concentrated in NASDAQ stocks. And that burst, and that caused a recession, and the NASDAQ dropped 80%, but it was just a NASDAQ bubble, wasn't it? It wasn't even a stock, wasn't a credit bubble, wasn't a stock market bubble, and wasn't a housing bubble for sure. And then in 2006, we had a housing market bubble. We didn't have a stock bubble, and we didn't have a credit bubble, really. It was a stock market. It was a housing market bubble. But today we have a credit bubble, we have an equity bubble, and we have a real estate bubble, all existing concurrently and at record proportions. That just cannot end well. Now, the only thing I think that could save us, and I'm not even sure it could save us right now, because let me just tell you what I think could save us. I think if the Fed went below the rate of inflation, so if the Fed were to slash interest rates right now below 3%. So right now we're at 5.25 to 5.33. So you're talking about 200 plus basis points in rate cuts immediately. That might work, but here's the problem. If they did that now, I think the long end of the bond market, so if they did that, ex ante, so before we had a recession, then you would see, I believe you'd see the long end of the bond market go, it would crash and yields would spike. There's a very good reason for that, because you'd have all of the fears of inflation coming back from a very aggressive Fed on top of the fact that we already have an insolvent nation with $2 trillion deficits, in a context of near record low unemployment. So, I mean, I don't think in other words, I'm not a Cassandra. I mean, I have a portfolio. The portfolio is up this year, doing just fine, thank you. I'm not sitting there shorting stocks all the time. That's not how I make money. I make money by making my clients money, so I don't spread fear. But I'm monitoring the situation here. I just laid out the situation. The situation is a very unbalanced economy. It's been marred by inflation. We have three big asset bubbles existing concurrently. We have an insolvent nation of assets minus liabilities. All those things are facts. So I am monitoring the model that I created, part of the model contains financial conditions and credit spreads. And when those internal components, those arcane internal components, start to signal that we've got a problem, then I will adjust the portfolio to be more bearish, more hedges. But right now, we continue. We have some hedges. We do have some gold. I have a couple of I'm in bond and bond proxies, which are doing very well in this disinflation, not deflation, disinflationary environment. We've been long India for a very long time. It's been a great trade for us. But getting the timing correct, if I am right about the bubbles bursting, you need that model. You need to monitor those arcane internal components, and this is exactly what we're going to.
We've covered a lot of ground today, and the evidence is clear. Silver is poised to outshine all other safe haven assets in the coming economic turmoil. From its essential industrial demand to its proven track record during crises, silver stands out as a beacon of stability in an uncertain world. Mike Pento's warnings should not be taken lightly. Economic conditions are deteriorating, and the traditional pillars of safety, like the dollar and government bonds, may not hold up under the pressure. But silver offers a different story. It's not just a hedge. It's a dynamic asset that could grow in value even as other investments falter. With inflation eating away at the value of your money and asset bubbles on the brink of bursting, silver's dual role as a monetary and industrial asset gives it a unique advantage. And the current market sentiment, with increasing demand and limited supply, only strengthens the case for making silver a core part of your investment strategy. The window of opportunity is open, but it won't stay that way forever. As more investors turn to silver, prices are likely to rise, making it more expensive to secure a position. The time to act is now, before the full brunt of the economic storm hits. Don't just take our word for it. Consider the facts, analyze the trends, and make the decision that's right for you. But remember, in times like these, being proactive can make all the difference. Secure your wealth, protect your future, and consider stacking silver before it's too late. And before you go, if you found this information valuable, don't forget to subscribe to our channel. Stay informed with the latest insights on how to navigate these challenging times. And as always, remember, this is not financial advice, but a perspective to help you make informed decisions. Thank you for watching, and stay safe out there.
Well, I'm looking at rising default rates in credit cards and auto loans. I'm looking at credit spreads, which have spiked massively when the yen carry trade started to unwind. But now you see, if Powell is going to have an aggressive rate cutting cycle, guess what's going to happen? The yen is going to rally huge against the dollar, which is going to put another crimp on the yen carry trade. So you have another rush to unwind these carry trades, which means you have to sell stocks and bonds around the world and then sell those currencies and buy back the yen. So it could be very destructive for markets. I don't see. I look at the monetary fuel, which is, if you look at the Fed's balance sheet, it's shrinking. If you look at the level of real interest rates, it's positive. Um, if you look at bank lending standards, they have inverted for the longest inversion in history. I mean, it was inverted for, it was the second steepest inversion in history. There's 100 basis points of inversion. And it has been inverted now for the longest period of time in history. And this particular indicator has 100% accuracy of predicting a recession since 1955, except for one period of time when GDP crashed. I think it was 1965. It crashed from 10% to zero. We didn't have a recession, but we had an absolute debacle in the economy, and we haven't had one yet. So I'm not ready to throw these indicators out the window. You look at leading economic indicators, NFIB, National Federation of Independent Businesses. All these things still point to we have a very weak economy and an economy that's weakening. And again, the calculation is, will the Fed's handful of rate cuts that have already been priced into the bond market change that calculation? And I think the odds of that happening, of a soft landing, are